Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. In this video, we are going to cover our weekly portfolio update. So we did add $1,771 and some change into the portfolio, so we will cover those purchases. We will also cover any dividends that were paid out, any options that we were in. I cover any sales in the portfolio. Again, we do this every Sunday morning. For those of you who may be stopping by for the first time, well, it's not rocket science. In my opinion, the best way to be doing anything, keep it as simple as possible. It really boils down to consistently investing, buying dividend growth stocks and growing companies with a positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks in my portfolio on a weekly basis. I also do large purchases if I have extra funds. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account. I don't send you into any other sites or make you sign up for a course or charge you for courses to see what I'm doing or charge you for a newsletter or anything else to see what I'm doing. It is free, but if you would like to help out the channel, if you could do me a favor, make sure you hit that thumbs up button down below. If you are a dividend growth investor, if you are new to the channel, if you find any value in this content, make sure you are subscribed. The majority of the viewers of the channel are not subscribed, so take a moment, hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community. It is free. It just takes a second or two of your time to click those buttons down below. Make sure you click that notification bell as well so you're notified whenever we put out any new content, as well as these portfolio updates we do every Sunday morning. We also do a stock pick of the day series Monday through Thursday. So again, click that notification bell so you can see all those videos as we push them out in the future. And drop a comment down below. Let me know what you are buying. What are you adding to your portfolio? Are you making any sales right now in your portfolio? Making any adjustments? Adding some new positions, or maybe trimming some positions out, or even trimming some positions down a little bit that you may have seen some significant gains on. I know Starbucks recently had a big jump up, and some people were taking advantage of that and either selling out of their position altogether or selling some of the position to lock in some gains. So let me know what you're doing in your portfolio. Really appreciate everyone out there. Again, it's free to do all that. It doesn't take you but a couple of seconds, and it really does help out a small YouTube channel like mine push out the content. One more thing that does help is watching the videos to the end, or as much of the video as possible. Doing all that helps with the YouTube algorithm. It helps to push out these videos. It lets them know that you like the content. So make sure you do all that. Again, the most important ones, hit that thumbs up button, make sure you're subscribed, and hit that notification bell, as well as dropping a comment down below. Thank you to everyone who's taken the time to do that. Again, I really do appreciate it. And a special thank you to all the subscribers out there, over 1,000 subscribers now, and we're headed to 5,000. So help me get there and beyond. Can't do it without all of you viewers out there. Now, first up, we are going to jump in and look at the options. And we did have, I will say, a better week in the options market with all the volatility out there the last couple of weeks. This week was the best week of the year, really, for options. So we did have a couple that we jumped into on Monday the 12th. So we'll go over those first. And then we did have one as well on the 13th that I went into after MPW announced that they were cutting their dividend. Really disappointed in MPW on this, so we'll talk through that a little bit here towards the end, because I probably am going to be making a significant change in my MPW position, but we'll talk through that a little bit more in the end. Let's cover the options first. So on the 12th, we had two contracts that hit. Now, these aren't the only two that we submitted. These are just the two that hit. I think we threw out 5 or 6 more. Johnson & Johnson was another one we threw out that didn't hit. I know NTR was another one. Kraft Heinz was another one, but these two were the ones that we got a bite on. So we had one contract of BABA, ticker BABA. This is a Chinese company out of the consumer discretionary sector. So one contract represents 100 shares. To do these covered calls, you have to own 100 shares, and 100 shares equals one contract. So that's what that -1 means. BABA is the position that I ran the contract on with a end date of August 16th. Now, the strike price was $88, which basically means if the stock would have hit $88 or above, it would have been called away. It did not. We'll see that here in a little bit. We'll go over the results of these two contracts as well. And we received 35 cents per share in options premium. And then they do charge some fees, 50 cents and 5 cents, 55 cents. I don't know why they break it up that way. Must be two different types of fees. But anyways, so total we received $34.45 for the one contract here, the one covered call for BABA. And we also got the Cisco covered call as well, one contract, so 100 shares again, ticker CSCO out of the information technology sector. Same end date, August 16th, strike price of $48, and we received $53 per share for this one. So minus the fees, total $52.45. So these two contracts did expire August 16th. Now, two different results here. As you can see, the Cisco, the ticker CSCO contract was assigned. So that means it was over $48, and actually it was over $49. Cisco had a great week. They really recovered. I think it was by almost 8% here. So I was not far enough out of the money to keep this one in my portfolio. But what we will do is we'll probably run the wheel. We'll either buy these shares outright again on Monday and put them back in the portfolio and try to run a covered call again, or we may run what they call a cash secured put. We'll take the funds from this sale, and we'll probably have to add $100 or so to it, and then we'll run a cash secured put. I'll see what the two options look like to make that call on Monday, but this one was assigned, so we have the cash associated with it. I am still showing that I have the 100 shares in Cisco because I intend to, like I said, either buy them outright or run a cash secured put next week. And the BABA covered call, it expired worthless, so that just means the 100 shares stay in our portfolio, we keep the premium, and we'll look to run this again. I think BABA only ran up to about 83, so this one was far enough out of the money. I could have even probably got a little bit more options premium if I would have done a covered call at 86 or even 85, but I'm trying to run these out far enough out of the money so that I keep the positions as well as keep the options premium. Now the other one we opened on the 13th, which was Tuesday. MPW did announce they reduced their dividends. So I am trying to recoup some of the losses here running options on MPW. So I ran 5 contracts on MPW. I actually initially put in 10 contracts, but only 5 got assigned. So MPW, 5 contracts, that's 500 shares with a expiration date of August 23rd. So that is actually next Friday. I am actually assuming that these will be called away. These shares have been kind of bouncing between $4.50 to $5 over the last several weeks. So again, I put it down low enough where these would be called away. I am comfortable selling these shares at $4.50. I will lock in a loss at that, and I will probably use this position as a tax loss harvesting towards the end of the year to help offset some of my gains in other stocks, as well as dividends and options I've been paid out for the year. So this may be my my play for the year on a tax loss harvesting position here. I don't do that a lot, but this one is one with them reducing the dividend. Again, I was comfortable with the first reduction, but I'm not feeling very good about the second reduction. It would take a significant amount of time for me to recoup the funds here on this one, so I'm not really willing to wait it out. I think I'm going to sell out of this position, roll these funds into other positions, build out some of the other positions in my portfolio. I haven't really made that call on the total, but I am comfortable allowing a large chunk of it, not quite half of the position, to be called away, which is what these 5 contracts will represent. We'll see how this shakes out on next Friday, but it does expire next Friday. So we received 27 cents per share, which after the fees amounted to $132.35 in options premium. All total, with the 3 contracts, $219.25, and this $219.25 is part of the overall $1,700, a little bit over that we added to the portfolio this week. All right, we're going to jump over to the first dividends that came in for the week. We did receive the dividends from Enterprise Product Partners, ticker EPD, on August 14th. We received $146.08. And we have the DRIP set, so that just stands for Dividend Reinvestment Plan. That means anytime a company pays out stocks, in this case Enterprise Product Partners out of the energy sector, ticker EPD, when they paid us, those funds go right back in and buy more shares. So that $146.08 added 5.12224 more shares to the portfolio, and those 5+ shares added an additional $10.75 in passive income over the next calendar year. And what you're seeing here is when you hear the term dividend snowball, that is what this is. So I have already purchased shares of Enterprise Product Partners. Those shares in the portfolio paid out dividends. Those dividends buy more shares, and those shares add additional income. That is the dividend snowball in effect. So even if I don't add any more to Enterprise Product Partners, 4 times a year, whenever this company pays out dividends, it will add more dividends to the portfolio, and those dividends will add additional passive income. That is the dividend snowball in effect. That is the compounded interest over time, not only the capital that I add, but the dividends paid out and the capital added from those dividends as well. And more examples of the dividend snowball here. On August 15th, we received a lot of dividends from several different companies here. All total, $368.79 in dividends. We received dividends from Ally Financial. This is a bank out of the financial sector, ticker ALLY. Paid us $71.16. And again, we have the drip set on the portfolio, so that $71.16 went right back in and picked up 1.7224 more shares. We picked up $67.42 in dividends from Realty Income, ticker O. This is a REIT out of the real estate sector. That added 1.13003 more shares to our Realty Income position. Omega Healthcare Investors, ticker OHI. This is a REIT out of the real estate sector. This is very similar to MPW. They focus on elderly care rather than elderly hospitals, but kind of in a similar space there. And they paid us $193.86, which added an additional 5.16426 shares. And last but certainly not least, Procter & Gamble, ticker PG, out of the consumer staple sector, paid us $36.35. That went in and picked up 0.21704 more shares of Procter & Gamble. And the dividends paid out, the new shares that they picked up, added an additional $20.34 in passive income over the next calendar year. So that was it for the dividends received. Now we will jump into the new capital allocated to the portfolio this week. We did spend some of that. This should say August 12th here. On August 12th, we added $1,285.03. And that was broken up into 6 different positions. We added more to our Cisco Systems, ticker CSCO position, 4 more shares there, picked those up at $45.53. So there you can kind of see, right, I ran that options with a strike price of $48 and was buying shares on the same day at $45, and it closed out the week over $49. So that tells you how much Cisco Systems ran up through the week. I was really wanting to kind of build this out a little bit more, but I will probably back off a little bit. I'm definitely going to add back in the 100 shares that got called away. I don't know that I will add a significant amount more here. If it was to drop back into the 48 or 47 range, I probably would. But for right now, I think $49 is right around my cost basis. I might be adding a little bit more if it stays around or below my cost basis. But for now, I'm going to focus on just adding back in the 100 shares. Again, whether that's buying back the shares outright and running another covered call, or running a cash secured put with the funds that we have received from the options this week. Now we picked up 2 more shares of CVS, ticker CVS Health Corporation here out of the healthcare sector, 2 shares at $56.65. I am going to continue to nibble on this one as well. Picked up 6 more shares of Nutrien, ticker NTR. This is out of the material sector. Picked up those 6 shares at $46.43. Added additional 6 shares to our Comcast Corporation position, ticker CMCSA, out of the communication sector here, $38.75 per share there. I'm going to continue to build this one. So long as it's under 41 per share, I'm going to add here. I'd like to get this up to 250, if not 300 shares, and build this one out significantly, even doubling up my position from where it currently sits. We added 2 more shares to our Owens Corning position, ticker OC. Now this is out of the, I don't believe this is consumer discretionary. I believe this is actually like Union Pacific, out of the industrial sector. I'm pretty sure Owens Corning is out of the industrial sector. I'll check that out here in a minute, but I'm pretty sure Owens Corning is out of the industrial sector. 2 more shares there at $155.15. And whenever we get to the overall portfolio update, you're going to notice that this is actually well above my cost basis, but my cost basis is so low on this position that I am going to nibble on this one, try to bring this up one to about 50, maybe 55 shares there. I'd like to build this one out while it's pulled back. I am up significantly on this position. I think I'm up over 60%, but at one point I was up over 90%. So it really has pulled back with the recent overall market pullback. It's down about 30%. So I'm going to add to it while it's down, even though it is significantly over my cost basis. Same goes for Procter & Gamble. It is significantly over my cost basis. I think I'm up about 19 or 20% here, but my cost basis is so low, I don't mind nibbling a little bit. I'd like to get this up to 40, maybe 45 shares here, so I'm going to nibble here as well. Added one more share to our Procter & Gamble position, ticker PG, at $168.21. And the $1,285 and all the new positions added here added an additional $40.68 in passive income. And we weren't quite done. This should say August 16th. On August 16th, Friday, we went back in and added an additional $486.61. And with those funds, we picked up 2 more shares of our Valet position, ticker VAL, out of the material sector. This is a mining company. There are some tax implications around these foreign companies. This is out of Brazil. So make sure you understand, if you have companies that are foreign companies, even though they are sold on the New York Stock Exchange, there are going to be some foreign taxes around these as well whenever they pay out dividends. So make sure you understand, either you are going to be responsible for paying those, or your brokerage account may be taking those out. And just make sure you understand whether it's you are going to do it at the end of the year at tax season, or if your brokerage does it for you. You just want to know which way you're going there. My brokerage takes the taxes out whenever they pay dividends, so I don't really worry about it. Whenever they give me my end of year readout, it includes the taxes taken out. But if your brokerage doesn't, you need to understand you will be liable for any companies that are foreign companies' taxes. Pfizer, ticker PFE, out of the healthcare sector. I picked up 4 more shares there at $28.11. And these 2 next ETFs are part of our weekly buys. We are going to be picking up at least 1 share of these, regardless of what the market is, whether the market's up, whether the market's down, whether the market's floating sideways. I'm going to be adding at least 1 share of these 2 ETFs. First one is Schwab Strategic Dividend Growth ETF, ticker SCHD. 1 more share there at $81.66. And Vanguard's Total Stock Market ETF, ticker VTI. And that's exactly what it is. It's all of the stocks in the New York Stock Exchange, the United States Stock Exchange. And we picked up that 1 share at $272.15. All total passive income added here was $15.38 from the $486.61 we added and the new shares bought. Total invested $1,771.64. Total passive income added, along with the new capital as well as the dividends paid out, $87.15. And it was so beautiful because this would have put us over $1,000 per month in dividends, except for MPW decreasing their dividends. So you'll see here we've got a little bit to go to get to that mark again, and that is why I'm so frustrated with MPW. We're just about to get there. This would have been the week, but now it's looking like it will be sometime in September. We'll talk through that a little bit here more at the end of the video, but let's keep rolling here. So let's run through a quick sector weight update here. Communications sits at 9.85% of the overall pie. Consumer discretionary makes up 8.47%. Consumer staples at 9.52% of the portfolio. Energy makes up 6.06%. Financials at 5.71%. Healthcare makes up 13.85%. Industrial sits at 6.14% of the portfolio. Technology at 6.85%. Materials at 8.41%. Utility makes up 9.62% of the portfolio. REITs and real estate is at 11.22%. This is one that might be the big change as we decrease our MPW position. This is going to decrease, and it'll throw some of these into higher weightings. And depending on where we reallocate those funds, we're going to see some changes here pretty significantly over the next couple of weeks. One, I may look to sell out of the positions that are the shares of MPW that are not tied up in that covered call right now. We might look to do that on Monday and reallocate those funds elsewhere. Maybe even run some, take the funds and run some covered calls on them. We'll see. We might even run some additional covered calls on MPW. with some of those funds just to try to recoup some of those losses. But we'll see what Monday holds. But there is going to be some changes here probably over the next couple of weeks, because I'm either going to be selling out of the MPW position or I'm going to be trimming it significantly. And then the smallest sliver here is still ETFs at 4.31%. Over here on the right, you can see the portfolio sector weights broken down a little differently. You can see the percentages that match the pie here, as well as the dollar amount allocated to each sector as well. Now here it is, and again, I show this out in the open, fully transparent. Every Sunday morning, you are going to see my overall portfolio, where it sets, what I'm up in, what I'm down in, whether the market's up, whether the market's down, whether the market's floating sideways. I think it is important to show a real portfolio built out over time, the ups and downs associated with it, by a real person, not a financial guru or a hedge fund manager or anyone who's trying to sell you courses, anything like that. I want you to be able to see whether you're a new investor, an investor who's just getting started, or an investor who maybe is on the fence and hasn't quite started their portfolio yet, doesn't know what they're doing, and is worried that they don't have enough information. I am just like you. I go to work every day. I have a wife and 2 kids. I own my own house, and I did not go to college for investing or finances. I am learning as I go. I am making mistakes as I go. That is the part of the portfolio. I actually was looking at Warren Buffett's 13F recently. He just sold out of Paramount Pictures, which he admitted was a mistake to buy, down significantly. So even the best investors in the world make mistakes. You are going to make mistakes as well. Some of those mistakes are going to cost you, like my MPW position, right, down 35.35%. And you can see here this red, that means they reduced the dividend from 15 cents down to 0.8 cents. So to me, that's a mistake. I should have probably cut MPW out the first time they cut the dividend, but I held on thinking that it would be a turnaround play, and it's not going the way I want it. So I want you to see the mistakes I make over time so that hopefully you can learn from those mistakes as I learn from those mistakes. They're costing me money. They won't cost you anything, but you will make mistakes, and some of those mistakes will cost you something. That is part of investing, and again, it impacts even the greatest investors. Don't let that be a deterrent to start investing, okay? That's why I want to show this portfolio so you can see it happens to all of us. And anyone tells you that they don't have any losses, that's a lie. They're lying to you, and if they're not showing you their portfolio every week, you need to find someone else to watch. You should not be paying someone, especially if they are not a financial advisor, should not be paying someone for a course or to see their portfolio who is not a professional. That's just my opinion. As you can see here in this column, here's all the tickers, all the different positions in the portfolio, how many total shares I own of each, the current price as of the close of business on Friday, market value as of the close of business on Friday. This is my average cost per share, my purchase price, so how much I have my own funds into each. This also includes dividends reinvested. Total return, whether I'm up or down here, you can see the dollar amount. If it's in the red, that means I'm down. Obviously, my biggest loser is MPW. Percent return here, same thing, biggest loser, MPW, though Valet is down significantly as well. I am adding to this one. I think that this is actually a great buying opportunity for Valet. MPW I was nibbling on until they most recently reduced their dividend again, so I don't like that they cut it again, and that's why I have it highlighted in red. So there may be some significant changes coming to this position here over the next couple of weeks. What sector each position falls in, whether they're quarterly, monthly, semi-annual payer, current yield as of the close of business on Friday, my yield on cost, portfolio weighting. So what we saw on the previous slide was each sector weighting. This is each individual's weighting. And I have a rule here for the portfolio. I don't want any one position to be more than 10%, and I don't want any one sector to be more than 20 to 25% of the portfolio. So I would be trimming and adding to different positions in different sectors as they reach that. Right now, the only thing that's even close to being 10% is Johnson & Johnson, which is not really that close. Estimated annual income in this column, payout months here, dividend growth year over year here, and where it sits at 15% of a 52-week low. So let's talk about this for a second. This is just a high watermark. We're going to use Owens Corning as an example. Owens Corning, you just saw that I added 2 more shares to this position, right? My cost basis is $95.29. So I really want to be adding when it's under my cost basis, and it's not, it's significantly over my cost basis, or when it's under 15% of a 52-week low, which is $126.44. But Shane, it's not under either of those costs. It's not under my cost basis, and it's not under 15% of a 52-week low. Why are you adding to it? Well, my cost basis is so low that even if I add to it, it is not bringing me up above this 126.44. So I am going to continue to nibble on this. Like I said, maybe get it to 50 to 55 shares there. And so long as I stay under where it sits at 15% of a 52-week low, I'm fine with adding it. Now, once I get close to that, I'll back off again. I would love for it to continue to pull back, right? Like I said, I'm still up 67.47%, but just a couple weeks ago, I was up over 90%, almost 100% on this position, right? So it has pulled back about 30%. So I'm going to take advantage of this 30% pullback and add to it while it's down, even though it's over my cost basis, and bring up my cost basis a little bit while I still keep it under 15% of a 52-week low. I hope that made sense. I just used this number here as a high watermark. I'd like to keep my average cost per share under this number, but it's not a hard and fast rule. There are some positions that are over this. Verizon, for example, is my cost basis is at $41.13, which is significantly over 15% of a 52-week low. And I've added to Verizon over this, right? I may even nibble on it a little bit more. If it drops back into the 30s, I'll probably add a little bit. That's where I like it. I like it around 39 or under for Verizon. Even though, again, that's over 15% of a 52-week low. So this is just a benchmark. It is not a hard and fast rule. It just gives me something to kind of keep an eye on of where I want these positions as far as cost basis or a high watermark cost basis. All right, total shares, 6,618.355 shares in the portfolio. The market value as of the close of business is $287,072.86. I have, including dividends, $264,157.59 into the portfolio. Total return currently $22,915.27, which is nice to see, but this is not what I focus on. I am up 8.67%. Again, not what I focus on. Definitely nice to see, but not as important as what is circled over here in red. Current yield as of the close of business on Friday is sitting at 4.069%. So that as the market has shot up here, the yield has really shot down. Yield on cost is still sitting at 4.42%. I'd like to keep this above 4.4% if possible. Portfolio weighting here, that's 100% of the portfolio is accounted for. And this, the reason it is circled in red, is what I focus on. The estimated annual income, and as you can see, it is down. It would have been over $12,000 this week had this not been cut. But it does sit at first time in a long time, it has actually gone backwards. So it currently sits at $11,680.42 and passive income from all of the positions, the dividends paid out over the next calendar year. So it's nice to see it didn't drop, too much, but it definitely dropped by a few $100s here, almost cut that position in half as far as the payout. So again, I'm very disappointed in MPW. I thought the dividend cuts were done, but they definitely hit me with another one. I think it was like a 47% decrease. So down to 8 cents there versus the 15 cents it was last week. And I don't anticipate them raising this dividend anytime soon. They do seem to be on a better footing as far as financials. They've made some sales. Looks like things are headed in the right direction, but this dividend cut was really a gut punch for me anyway. Like I said, this week I was really looking forward to being over $12,000 or $1,000 a month in dividends, and it really, really put a monkey wrench in those plans. Now I am not anticipating to be over $1,000 a month until probably mid to late September. Hopefully before my birthday on September 21st is what my goal is right now. So we'll see how that shakes out over the next month, but I'm anticipating it's cost me about a month or so with this cut, and that's about what I think it'll take me to recover. Dividend growth year over year sitting at 6.06%. And as you can see here, I do have some positions that are not raising dividends. Kraft Heinz is kind of one I'm watching to see. Hopefully they start raising dividends again. I'm not as concerned with this one. I knew it going in that they weren't raising their dividends, so I went in with a grain of salt, knowing, hey, hopefully they do it in the future, but they have a very nice starting dividend yield. So I may just continue to nibble on this one and try to bring that yield on cost up a little bit as they're under my cost basis. Same thing with a couple other ones. Where's another one that's not raising its dividend? There's 0% there. MPW, obviously. This is another one. BABA Baba it just recently started paying dividends, so I know it shows no dividend growth. I'm anticipating dividend growth on this one. It's just their first year for dividends, so we'll see what they do next year. So I'm not as concerned with that one, but Kraft Heinz is one I'm looking at. MPW definitely. This one here, what is this? OHI, another one. I'm not concerned here. I'm not looking to get out of this one because their yield is so high, right? I locked in a 9.32 starting yield on cost here. It's down now because I'm up 30% on the position, but I don't mind keeping that as like a long-term bond equivalent with some potential upside as far as price appreciation. The other one that I'm watching here is AT&T, but same thing, similar to Kraft Heinz here, KHC. I went in buying AT&T. They had recently cut their dividend, and I knew that going in that they probably wouldn't be raising it anytime soon. I am hoping they start their dividend raises here again in the next couple of years. But if they don't, Kraft Heinz, AT&T would be two that would be potential cuts. But for now, I'm going to hold them, collect the dividends. I like the dividend yield. Same thing on T. I locked in a 6.5% dividend yield, so like this one, and I'm up 13% on the position right now, so don't mind that at all. I'll continue to hold and hope that they start raising their dividends here in the future. Union Pacific just recently started raising their dividend again, so sometimes companies do cut their dividend. MPW, for example. Sometimes companies put a halt on their dividend, Union Pacific, for example, and then sometimes positions start growing those dividends again. Again, Union Pacific, for example. Union Pacific for about a year and a half, almost 2 years, they paused their dividend raises, but now they are raising again. So might be worth holding on to some of those positions, especially if they have a nice yield on cost or dividend payout, and seeing how they do. Just because something cuts a dividend is not necessarily a reason to cut it out of your portfolio, but if they do it 2 times like MPW, maybe it is. And I have used that as a reason before. Intel, for example, was one I cut out of my portfolio the first time they cut their dividend. I also thought they'd drop down significantly, which they did. And MPW, like I said, probably lesson learned here. I should have cut bait on this one early on. I wouldn't have had as big of losses here, and I wouldn't be, chasing that loss of dividends. I would probably be close to that 12,000 right now because I would have been adding to other positions instead of this one. But that is what it is. So again, hopefully you enjoy these videos. Hopefully you enjoy the portfolio updates. Hopefully you're getting some value out of it. If you are, let me know in the comment section down below. Really appreciate hearing from all of you, and drop any questions you have for any positions in the portfolio as well down there. And really, that is it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. So many of you out there are watching the videos, which leads me to believe you enjoy the videos, but you're not subscribed. Help me out. It doesn't cost you a thing, and it really only costs a couple seconds of your time, and it really does help me out. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series that I do Monday through Thursday, go ahead and drop that down below as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.